How this plays out, but that's my best guess, like a 1974 style sharp recession, recovery back up. So what's happening in crypto right now is I think we're in a bottoming process and have probably bottomed. So I'm thinking that economic growth falls off a cliff. Now, if I look at this chart, this is an indicator that we've constructed at GMI, which uses the rate of change of interest rates, commodities, and also the dollar. And it gives a financial conditions index. It leads the Goldman Sachs Financial Conditions Index now, and suggests that we're about to go into a short, sharp recession, and that the ISM, which is my best guide to the business cycle, is going to fall sharply down to something like 35, which is a decent sized recession. Now, this indicator is already picking up, which means that it leads by 9 months. So therefore in 9 months, now we can't always tell how this plays out, but that's my best guess, like a 1974 style sharp recession, recovery back up. And I think asset prices bottom well before the economy. 2018, they bottomed pretty much a year before. And in other periods of time, it tends to bottom 6 months or so before. So I'm thinking we're close to the bottoming phase in markets overall. Equities might have another stab lower because I think they're not fully priced in. They're pricing in about, let's say, 45 on the ISM. That's what the S&P is doing. NASDAQ's probably about 40. So that's starting to price in a reasonably severe recession. 47 is about a recession in ISM levels. And if I look at the further end of growth stocks, I call the exponential age stocks, they're pricing in somewhere around 30. So a really severe recession. So the markets are sort of pricing it in. Now, crypto's been picking up. Now, it's interesting because most people don't understand that macro and crypto are so related, because crypto is this network adoption model that I'll come on to in a bit. But really, the big cycles, I'm starting to think, are not driven by the halving cycle so much as the macro cycle. ISM is coming lower. We can see this also for the next one, which is the new orders minus inventories. It's less forward leading. It shows us maybe in the next month or two that ISM is going to fall pretty sharply. Okay, that's interesting because what we find is the biggest macro influence on crypto is the global money supply. So this is M2 year on year, and this chart shows its correlation to the crypto markets overall. So this is the crypto market cap versus global money supply. And you can see the cycles are the same. It might coincide with the halving cycle, and that makes a supply issue plus a demand issue. Why a demand issue? Well, because global liquidity is what M2 is. So if there's more liquidity, there's more money that flows into crypto. As liquidity comes out of the system, there's less money. One of the other things that's been weighing on crypto has been inflation. It's a long duration asset, and long duration assets need to worry about the discount rate, and inflation is part of that, plus interest rates. Interest rates have risen, inflation has risen, risk assets get discounted more. So we've got to that, but I think you can understand by now, I think we're at the big turning point in the economy where inflation starts falling, growth collapses. That brings down yields, and if it brings down yields, it starts allowing stuff further out in the duration curve, like 10-year bonds, 30-year bonds, technology stock, and really crypto, because it's the most forward, longest term asset of all, to start outperforming. As you can see from the next chart, ISM actually leads money supply. So in this chart, ISM is inverted, and the money supply looks like it should start bottoming out and going higher. As economic weakness comes, the central banks start coming into play, liquidity starts being pushed into the system. We're already seeing it in China. That's probably picking up the money supply growth already, but I see it globally. So that becomes interesting. You know, the US dollar situation, maybe we see swap lines, that helps money supply. So I think we're going to see the turn in money supply. So that's the macro for crypto improving as growth goes slower. It's kind of counterintuitive because you think, well, if growth's slow, then crypto is going to be bad. It's the opposite. As growth slows down, bond yields fall, inflation falls, money supply starts increasing, crypto starts doing well. So what this is a gyration in the long-term trend adoption of crypto. This chart is the chart I always show, which is the log regression chart of Bitcoin. And what you can see is in the log regression chart, it got to roughly 2 standard deviations oversold, which is actually about the most oversold Bitcoin's ever been versus its trend. So we should be looking at a reversal point because the exponential trend of adoption is not going away. It's not changing. In fact, the adoption in this bear market has been much better than the previous bear markets where we saw a lot of people leave. We've not seen a lot of people leave. We've just seen network activity slow down. So I'm looking for the turn here. The other long-term indicator I use is the 5-year exponential moving average. And this has encapsulated the trend of Bitcoin pretty much since the beginning. And here we are, just touching that trend. We broke through it. I think we break back up through it. So again, this is the buy zone. You buy these times, and this is where you make the larger returns. The risk reward gets better and better and better the closer to that 2 standard deviations oversold, the closer to this exponential moving average. That's when the really good risk reward. What's the downside? 30%. What's the upside? 10x. So those kind of risk rewards are super rare in almost any asset class, but they are in crypto, and we're in that zone now, and I'm getting more and more comfortable with there. But Bitcoin is the most oversold it's ever been. So that would suggest that the markets are massively oversold. So again, the risk reward looks better and better here. It's actually the same for Ethereum. Ethereum, lowest RSI in history. Obviously, everything's starting to pick up. We've had this tremendous rally from the lows, which still looks small on the chart, but it's actually, some of these tokens are up 100%. I mean, ETH was up at the top of this run about 85%. I mean, that's pretty decent. But I think it's just the start. We're in the correction phase right now because we got overbought. But I think the correction doesn't last long before we go to the next leg higher as we start moving into the merge, which this piece is going to be mainly about when I get there. Another chart that shows us where we are is the rainbow price chart. I love this chart. It gives the logarithmic trend, but instead of the linear version, it gives you the log version, and it's a curve. And again, we're at the point where you want to be buying assets. It never gets through here. And if it does, it's for very short periods of time. That same rainbow works brilliantly for Ethereum too. And here we are, exactly in the buy zone where we should be finding any cash we can to put into crypto, according to your risk tolerance. When I've, again, still pretty much 100% allocated, and any income that I've got, spare income, I'm putting into crypto right now because I think the risk reward here is extraordinarily attractive. Another way of looking at it is on-chain activity, and the Bitcoin dominancy flow, which here was provided by Fidelity, again is showing levels that are supremely oversold. These kind of on-chain indicators are all over the place showing exactly the same thing, this is the level that we should be looking to aggressively accumulate crypto. Could we have a new low? Yes. I still think that's probably maybe a 40% chance, 35% chance. I think the low is in, and anything from here is a retest of that low. But, I could be wrong. Anyway, it's still a zone. If you say 30% downside, 40% downside, 10x upside, that risk reward, I'll take it all day.